final presentation for today is about the Cyprus Financial Services. Allow me for a minute to share my screen. Okay, before I start my presentation, let me give you some background information about myself. For all of you who have never met, my name is Xenia Neophytou and I'm the Managing Director of CX Financia. Having a background in finance and accounting, I have been involved throughout my career in various managerial positions in all aspects of corporate services, company law, international taxation, and financial and regulatory compliance. My experience, both in advisory capacity and hands-on operations as a CEO and member of risk committees of several regulated firms, led me to the founding of my own company, CX Financia. 6 years and no regrets, I should say. We are proud to be offering our exclusive mix of services to our clientele in Cyprus and abroad. I'm an active member of the financial services community, participating in the technical committees for funds of CIFA and EPAC, and a board member of the Cyprus-India Business Association, regularly speaking at events about finance and investments. I'm very excited to be here with you today and looking forward to your interaction that will follow at the end of my presentation. Now let me start the presentation. Our previous speakers gave a bit of overview, but just to highlight some points about the financial services, which are considered pivotal to Cyprus economy and have attracted significant amounts of foreign direct investments. Cypriot banks are fully recapitalized and regulated by the Central Bank of Cyprus and the European Central Bank under very strict guidelines. For investment firms and funds, there is one regulator, the Cyprus Securities and Exchange Committee, the CySEC, which provides streamlined procedures and reduced bureaucracy. The Cyprus capital market continues to grow despite tougher conditions, and with it, the regulator is expanding to cope with the additional burden. Cyprus investment firms are rightly considered as one of the most suitable options by those wishing to professionally offer and perform regulated investment services and activities within the European Union, and has been the jurisdiction of choice for more than 20 years, primarily for Forex CFD brokers. The investment fund sector in Cyprus has grown exponentially in the past years. The time and cost required to set up a fund has decreased, especially with the introduction of RAIFs, and we have seen a lot of interest from investors interested to set up funds in Cyprus. Finally, Brexit has seen an increase in financial services companies and fund managers looking to Cyprus as a low-cost European base to retain EU passporting rights. Now, let's move to some statistics taken from the CySEC most recent publication for the industry and performance as of December 2020. As seen on this graph, currently CySEC has 779 entities under its supervision, a number that is up by 4.42% compared to 2019, during which it supervised 746 entities. 229 are investment firms, 142 are fiduciary service providers, 125 are companies listed to Cyprus Stock Exchange, and 283 are management companies and undertaking for collective investments. Despite the crisis in 2020, the Commission continued to examine new applications for the licensing of new regulated entities without any interruption. A total of 88 entities were approved, 69 of which are active in collective investments, 14 in the provision of investment services, and 5 in the provision of administrative services. Now, as seen in the previous slide, CySEC supervises 293 management companies and the undertaking of collective investments that manage a total of 8.5 billion assets. In this graph, we see the growth of those 8.5 billion of assets under management over the last years, with the last 4 columns showing each quarter of 2020. As you can see in the graph, the growth has been exponential, and even now with the current crisis we face, the assets under management at the end of the Q4 have now grown by almost 3.79 compared to the same quarter of 2019. In this graph, we see the distribution of those 8.5 billion by management companies. IFMs manage the 52.5%, 22% is managed by sub-threshold IFMs, and 20% by IFMs and usage management companies. Total net asset value at the end of 2020 was almost 7 billion. Now let's look at the investment strategies of funds. The first chart showing that the majority is AIFs and RAIFs, and only 5.2 are UCITS. The second chart shows the investment strategy of AIFs, with 43% invested in private equity, 14% in real estate, 10% hedge funds, and 29.8% in other investments. Now we move to some highlights of recent amendments in the law. We already mentioned the introduction of the Registered Alternative Investment Funds, the RAIFs, is a positive change that has helped strengthen the sector significantly, since the time and cost required has greatly decreased. A new regulatory category entitled mini managers for sub-threshold funds came under SISEC supervision last year, while a new investment product, crowdfunding, was launched following the implementation of the relevant laws. Derivatives on virtual currencies can now be offered by SIFs, which now qualify as financial instruments and fall under the applicable investment law. Therefore, transactions on derivatives of crypto coins, for example, is now a regulated activity. Finally, the 5th AML directive, which has been transposed into national law, significantly expands its range of application. Service providers of crypto assets or custodian wallet providers and other financial services for crypto assets now fall within the AML regulation scope, and the gate is now opened for service providers on crypto assets offering extended line of services such as financial services on crypto assets, which will be registered with SISEC. Now we move to see what are the Brexit implications for the financial service providers. Andre, I think, mentioned as well some points. Will the UK financial service providers be able to continue to passport their services across the EU? As of 1st of January, UK investment firms no longer benefit from the MiFID II regulation and the provision of investment services and activities within the EU, therefore losing their EU passport and considered third country firms. So the next question will be, what happens to their subsidiaries or branches? EU subsidiaries controlled or affiliated to UK investment firms will need to obtain a MiFID authorization in one of the EU member states in order to continue to operate as EU investment firms. Branches of UK investment firms in the EU will become branches of third country investment firms and will need to comply with the national requirements applicable to the member states where the branch was established. Finally, in relation to the functioning of the markets and specifically in relation to UK trading venues for the purposes of the share trading obligations or the derivatives trading obligation, as long as there is no equivalence decisions by the European Commission, UK trading venues have become third country trading venues, and EU investment firms will no longer be able to trade the shares on UK trading venues. Similarly, UK market operators operating a trading venue or execution venue will cease to be eligible venues for trading shares subject to the MiFID share trade obligation. To prepare for Brexit, the SISEC has launched a dedicated section on its website to serve as a Brexit information hub, aiming at facilitating the compliance of interested parties with legal obligations following the UK's withdrawal from EU. The Brexit Information Hub contains a comprehensive set of Q&As per regulated sector, all Brexit-related announcements issued by SISEC, and all Brexit-related circulars addressed to SISEC-regulated firms. So, why Cyprus for financial services? As mentioned before, UK financial service providers have lost their EU passport and now considering other options for headquartering their business in an EU state. EU passporting rights are considered the most important factor for them, followed by ease of doing business and the taxation environment. Cyprus has seen an increase in financial services companies, fund managers, and e-money and payment institutions looking at the island as a low-cost European base to retain EU passporting rights. Cyprus modern legal framework follows the latest EU regulation and is based on the EU common law system. Furthermore, and on practical point, licensing supervisory processes for the regulated entities, including legal, regulatory, and commercial documentation, takes place entirely in English. The main driver is the speed of getting over the line in Cyprus compared to other jurisdictions, and the professional level of financial services offering, which is high. Finally, the independent public supervisory authority, which is considered among the strongest in EU. So, assuming that you wish to establish a base in Cyprus, what do you need to know? As CX Financier, we're professional advisors and compliance consultants, and acquiring and maintaining financial license is our expertise. The first thing to have in mind are the timeframes for getting the license. Overall, the authorization by SAISEC takes on average 8 months, considering there are no exceptional circumstances surrounding the application. It takes approximately 1 month to prepare the application and gather all the necessary documentation. Following the submission of a duly completed application, SAISEC replies within 2 to 6 months, depending on the complexity of the case, and gives a conditional license with some final provisions for activation and a time frame of a month for implementation of those provisions. A final inspection follows to ensure the conditions are met, and then the license is activated. It's possible to utilize the fast-track scheme of SAISEC, based on which there is an additional fee of 25,000 paid to SAISEC, which can reduce the processing time of the application by SAISEC. At CX Financier, financial service license can be separated in 3 stages: the application and activation stage, and license maintenance. The first stage, most important aspect, is the preparation of the application and accompanied manuals and policies, which would outline the business operations as well as the gathering of all necessary evidence to meet the regulator's due diligence requirements. Communication with SAISEC can be frequent to request clarifications or additional data regarding the information provided. The second stage, activation, involves setting up offices, hiring key personnel, as well as having key service engagements in place. Following activation, all financial institutions must meet their licensed obligations to maintain their license status, and this is the final stage. Financial firms must meet their reporting obligations, as well as stay up to date with regulatory changes and updated policies and procedures accordingly. At CX Financier, we have successfully assisted many firms to obtain a regulatory license suitable for their business requirements, and can fully project manage the application, providing turnkey tailored services. CX Financier was established in 2015 to assist financial services firms with their regulatory obligations. We assist with the licensing of investment firms, investment funds, and fund managers, as well as payment service providers and electronic money institutions. Our team provides regulatory advice and solutions throughout your business lifecycle, from startup phase to ongoing support once you have received your regulatory license, and support our clients with a wide range of additional matters, such as project management of regulatory and compliance projects. We can support the passporting of your license to other jurisdictions, assist in the preparation of the cross-border applications, and obtain legal opinions from host countries. Okay, thank you for listening, and I'll be happy to answer any questions during the next section of today's webinar. You can also send me an email or contact me to discuss further with your inquiries.